Farhadieh is with me today, the Chief Investment Officer. We have some breaking news here. You're just off of a vote that is going to change the way the board does business. Explain it to me.
I'm so excited to talk about it, Contessa. So today, we've had initiatives within the diversity policy, but today we're tapping into one of the most lucrative parts of the financial industry by advocating for inclusion of minority and women-owned investment banks. It's a $1 trillion industry. At the end of the day, there's fees to be paid, and it'll create a more competitive environment within the investment banking industry.
Okay, so that vote passed, the resolution changes, the policy changes moving forward, but you have already had a track record of choosing diverse money managers here. I'm looking at the returns. Over 10 years, the return on investment in private equity, 16.1% net of fees, the top performing public pension board in the nation in this particular arena. Why does it matter? What do diverse money managers and now investment banks bring to the table that help you see a return on investment?
I'm so proud of our board and staff on our commitment to diversity, but it's showing you that there's really strong performance to be had there. We've seen advantages. The top 10 performing private equity funds that helped with that 16.1% return, 2 of them were minority-owned private equity fund managers. You'll be missing out on opportunities by not having a broader, inclusive pipeline.
What are the hurdles in any sort of public pension board trying to get this kind of return? What are the hurdles in finding diverse money managers, diverse investment banks?
I would tell you they're artificial hurdles most of the time. You don't have enough assets under management, or you're a first-time fund where, it's truly a lift out from a large bank at the end of the day, or you don't have the right technology or insurance, so they're artificial hurdles. If you're intentional, you'll source some of the top managers.
What kind of metrics are you using when you choose how to allocate the investments?
So performance is key. So we want to see a persistent and strong track record generating alpha, especially if we're going to be paying active management fees at the end of the day. So that's, first and foremost. But by being more inclusive, it creates a more competitive environment at the end of the day, and you're getting the top tier firms. So broadening the network, we're getting access to the best at the end of the day.
The performance is one thing. What happens if you choose money managers or you're choosing an investment bank and they're not performing up to the metrics you expect?
As fiduciaries, we want folks to meet our investment objectives. If those aren't met, they're terminated at the end of the day. It's about the numbers. Strong performance is critical for the pension funds in Illinois, let alone in the country.
Well, congratulations. And I know you were really hoping that this vote went this way. And so congratulations on the outcome of that vote.
Thank you so much.
Jahara.